This has been an incredible year for the housing market, and many people are wondering if it's going to continue into 2022. In this video, we'll discuss several reasons you can be optimistic about the housing market next year. We'll discuss a few things that could cause a housing market slowdown. We'll review a Fannie Mae forecast for interest rates, and then finally discuss how inflation can impact the housing market. I'm Tim Hamilton with StellarQuest Real Estate, and this is our December housing market update video for Orange County. If you're thinking about buying or selling a home, please feel free to call or text me anytime at 714-486-4086. I am more than happy to answer your questions and help you out in any way that I can. Inman News recently published an article titled 5 Reasons to be Optimistic About the 2022 Housing Market, where the author interviewed Lawrence Yun, who is the Chief Economist at the National Association of Realtors. Yun does not believe that we are on the verge of a housing market crisis. He states several reasons, such as better control around subprime lending, robust buyer demand, and historically low interest rates. Yun does believe that interest rates will start rising over the next year, but he believes this change will be manageable in the market. He also states that he's expecting more homes to start coming on the market due to the ending of mortgage forbearance and other hardships that were brought about over the last year and a half. The combination of slightly higher interest rates and more homes coming on the market could have a cooling effect, which is why Yun believes it will have minimal price growth over the next year. He also states that homeowners don't have to worry too much about inflation, and he points back to the 1970s era of inflation, where home values actually outpaced the inflation numbers. He also states that home values have been a good hedge against inflation for the past few decades. Inflation has been a major topic of discussion recently, and it's an important factor to keep an eye on if you're concerned about mortgage rates. According to a recent news release by Fannie Mae, the Federal Reserve is expected to start hiking interest rates in the fourth quarter of 2022. They are forecasting an average interest rate of 3.3% for 2022, with rates closer to 3.5% by 2023. These are higher rates than we've seen over the past year, but they are still incredibly low rates when compared to historical averages. The caveat here is that if inflation continues to worsen, the Fed may make more dramatic rate hikes, and they may start sooner than anticipated. Rising mortgage rates affect home affordability, and they're a cooling factor in the market. So if interest rates rise too far, too fast, it could have a substantial impact on the housing market and home values. Now we're going to take a look at the supply-demand dynamics that are playing out in Orange County. We currently have an extremely low number of homes for sale, which is supply, and we have an extremely strong demand, which is why the market is currently so hot. You can see on this chart that the number of homes for sale in Orange County is extremely low when compared to the prior 3 years. We've had fewer homes coming on the market since about 2017, but that trend has gotten much, much worse during the past few years. You can see on this graph that in 2020 and 2021, there were far fewer homes that came on the market compared to previous years. Currently, we have about 1,457 homes for sale in Orange County. Compared to the 3-year average from 2017 to 2019, at the end of November, we have about a third of the homes listed for sale. So during that period, the average was 5,359 homes, and we're currently sitting just under 1,500. Buyer demand dropped slightly over the past few weeks, which is normal for this time of year, and it's currently sitting at a very strong level. There are several main reasons buyer demand has remained so strong despite the massive run-up in home prices. The first main reason is the historically low interest rates. The rates are currently sitting just over 3%, which is a little bit higher than the rock bottom numbers we saw before, but it's still a phenomenally low interest rate that many homebuyers want to take advantage of. The second main reason is we have a strong demographic of first-time homebuyers entering the market. Many millennials are reaching prime first-time homebuyer age, and they're entering the market very quickly and aggressively. So this demographic still has, a few more years to go, which is a strong support to buyer demand. So in combination, we have an extremely low number of homes for sale and a relatively strong buyer demand, which is why the market has remained in a hot seller's market where homes are selling quickly and appreciating in value. In fact, over the past 2 weeks, the expected market time actually dropped from 23 to 20 days, which indicates that the market heated up even more. If you want a copy of any of the reports or articles we discussed in this video, feel free to let me know and I can get those over to you. You can call or text me at 714-486-4086, and you can also find my email in the description below. If you're thinking about buying or selling a home, please feel free to call me anytime. I am more than happy to answer your questions and help you out in any way that I can. Once again, I hope you had a great Thanksgiving, and I'd like to wish you a Merry Christmas and Happy Holidays.